All right, Brian, welcome here on a Friday afternoon in sunny, well, it's not sunny, it's cloudy southern Alberta day.
Yeah.
A little cooler day, but welcome to our weekly conversation.
Yeah.
Understanding the P&L. We're in a third week of our 3-week series on why we think you can make more money when you understand your profit and loss statement. Right. So Brian Mahachik here with me. I'm Everett Dirksen. We're with EJD Mahachik, accounting firm based in Coaldale, Alberta, but we work for clients all over Canada, virtually, and a bunch of different things like that.
Yeah.
So let's get after it. Topic today is in depth on your margins. Right? Yeah, I love this one. This is where the rubber really hits the road or meets the road on the P&L, and so we're going to do that first, and then you're going to walk us through a pro tip on fixing one thing to profit 3 times what your accounting fees are. So I'm pretty excited about that. There's some money to be made out there for some shop owners, and we're going to get to that, and I'm pretty happy about that.
Yeah.
Cool. Okay, so let's get after it. Topic today, in depth on your margins.
Yes.
So tell me about that. What's in there?
Yeah. So, when we're looking at our margins, we are looking, in this case with a shop owner, we want to be looking at our big revenue items.
Right.
So what is that in a shop? It's typically our labor, our parts, tires. Not all shops that sell tires, but some will.
Yeah.
There's shop supplies.
Yeah.
Sublet if you're doing that. So those are typically our 4 major revenue components.
Yeah.
And we want to ensure we're assigning the costs for those revenue components appropriately.
Yeah.
To zero in or hone in on, hey, just how much money am I making on every hour of labor that I sell, or particular part that I sell. Now it gets deeper than that.
Yeah.
For instance, smaller parts I typically can get a bigger margin on than a transmission.
Right.
I can't sell a transmission to make a 400% margin, because that's going to be $30,000. I guess some transmissions could maybe be $30,000 work if it's a big unit, heavy duty unit. But yeah, so that's really what it is we're trying to isolate the margins for a specific business, in this case the shops, and zero in on those margins, and then really start working and boosting them up.
Beautiful. Okay, so we've got, looking at my profit and loss statement, I've got revenue up there.
Yeah.
And this is what you're talking about. I've got these different types of revenue that make up that number. Then I've got the cost of building that revenue.
Yes.
Right? Like the direct costs that you're talking about.
Exactly.
And then we talked last week about operating expenses and stuff, which comes below that.
Yeah.
We're focused on that top little swath today.
Yeah.
And you're saying to me, well, okay, I know this is how much I charged for labor in the revenue side. Now we want to get after what was the cost of that labor?
Exactly. So it's and on a labor side, it's really the large expense or cost associated with that dollar of labor sale is the wages and behind the scenes. But it's not just the $20 an hour or whatever I pay. Yeah. It's also all the benefits and all of that extra, right? So you want to be really ensuring, like in a labor side, for instance, that you've got the full load of the labor in there. And that's one of the areas that can commonly get missed. Is that the labor cost component isn't really tracking the full load of the labor. It's just the direct hour, right?
So in cases like that, when you see that, where's that showing up?
Yeah, it's buried somewhere down what you talked about down below, right? Yeah. It's going to be somewhere in there, benefits or what have you, right? Yeah. And that, again, that is, if there's one key here, that's really, we typically see in new clients that come on board, their P&L is set up as revenue and that laundry list of expenses. Yeah. And we're trying to segregate and pull those costs out of the laundry list and tie into those revenues so that you as the owner can actually see right in front of you, my labor sales made this much for the period and the direct cost is this much, and so I actually netted, and my margin on that particular labor component was X.
Yeah.
And that's almost turning the light switch on for a lot of owners, right? Like with a P&L laid out just as revenue and everything smushed into there, and then your expenses laundry listed. unless you're doing it some other way, you don't know. Right. I mean, you probably have an idea as to the margin you're making, but but yeah, exactly. Oh, am I off 10%? Am I off 20%? That's a big deal, which we'll talk about here in a few minutes.
Okay, so what's not in that section is all that other stuff.
Yeah, all the other stuff. Your regular fixed expenses. Hey, the office supplies, the paper for your printers, your pens that you have in just at the front desk or whatever, right? You're just your general supplies that you run. Those types of expenses is not what we're talking about right now.
Okay. So you said we break that out separately. We like to see it like that. We know that most successful businesses know those margins to the 10th or 100th of a percent, right? Why is this important?
Yeah.
To a shop owner?
Yes. So you hit on there a little bit.
Yeah.
Truly successful businesses know their numbers.
Yeah.
They're gonna, if I were to ask you, what's your margin on parts? If you're really running your shop well, you're going to say it's 52.3%.
Yeah.
You're not going to sit there and go, oh, geez, I don't know, carry the 3. Right? You're going to know those numbers. Why? Because that's how you operate a successful business, and you keep pushing it forward in terms of the profitability and your efficiency.
Yeah.
You got to know the numbers,
yeah.
And you got to have that data in the right way presented to you in order to know those numbers. And a lot of businesses that we see aren't set up that way.
And I think maybe the point out of that is, like you said before with the transmission, you're not going to get 400% markup.
No.
Like, we're not looking for an unreasonable margin.
Right.
You're just trying to find what is the right margin.
Right.
What is the number that should.
Whereas like a small little clip or something that I might have to install on a hose or what have you, maybe I might be able to get a much higher margin because that clip is only 30 cents.
Yeah.
Right.
Yeah. No, that's right. So most of the POS systems or the shop management software that you see, they have matrices and things like that you can use.
Yeah, exactly. But again, right in there, we see a lot of times where the POS system doesn't have the proper assignments of costs and behind the scenes, and there's problems. We talked about it earlier in this series about how and we have talked about it earlier in other areas where that POS system, which is really in a lot of shops, what everybody's in.
Yeah, it's like the gospel, right?
Exactly. It's what we're using to run our shop.
Yeah.
And if that data isn't in alignment with the true accounting data on the backside, which is really tracking all of the ins and outs in my bank, that's where the reality is. I might be sitting there thinking I'm running my shop with X margin when it's not really happening, and wondering why isn't there as much for me at the bottom line when I'm making this much money, right?
Yeah.
Or I think I'm making this much money.
Awesome.
So there's other things too. I mean, we're tracking. We want to find it leakage, like am I spending too much money on an area that I don't even know I am spending that on? Inefficiencies in areas. Labor being a big one. Just trying to just improve that overall profitability, right?
Yeah. So you might catch areas or times where parts are slipping out the back door.
Right, exactly.
Things aren't.
It does, believe it or not, it does happen.
Right. Or it gets installed wrong and something's broken, so you do it again.
Exactly. Or warranty, core charges aren't being tracked properly going back.
Yeah.
There's all kinds of things that could be happening when you start zeroing in on these numbers and actually maybe, you think, we've had some shop owners go, oh, geez, right? Like they didn't even know something was happening.
That's right. So, so this is critical, ultra critical to a business, a shop in particular.
Yeah.
In this case, where you're not going to get more profit just by not knowing what to do next, right? We got to figure out what the numbers are, find those leakages, find the inefficiencies, figure out what the right number is, and then go for it.
Yeah.
Right? Like get after it.
Exactly.
Okay. Yeah. So you mentioned them already, but what are the typical key areas we look at when you want to break out margin?
Yeah. So our financial statements, our profit and loss is busted out in a manner where we show the labor, the parts. Those are the two big ones, of course. Tires, separate that out specifically, unless it's just a small little minor component of it. But if you're actually a shop that's maybe selling some decent amount of tires, we'll separate that out specifically. Same thing with the sublet and shop supplies as well.
Yeah. No, I like that you've got a separate schedule in your financial
Yeah.
statements that goes through all those margins bit by bit.
Yeah.
And I know I was talking with a client the other day, just looking at those margins and going, yeah, this is ultra critical to see this, and not just once a year.
Mm-hmm.
Like, let's look at this all the time.
Monthly is what we want to be doing. And you actually told me too. You said like he's a pretty smart dude, and it was a bit of a like again that light switch going like wow, like
yeah,
this is great. Right?
Yeah, absolutely. Okay, cool. All right, so that kind of covers why we want to go in depth on our margins.
Yeah.
Do you see this as kind of like the one area where shops fall short the most? I don't know. When you take on a new client, are 100% of them getting this wrong right off the bat?
Yeah, well, not maybe not 100%, but at best,
yeah.
there's a lot of clients that we need to do cleanup on.
Yeah,
and of course, they're not going to be running a trial balance that they've never seen our layouts before, right?
Yeah.
So there is that work to get things in alignment. But most of the time, the vast majority of the time, the P&L itself is not set up in the manner that we have it set up.
I think that's the beautiful thing about this is that you've got a system from a bookkeeping perspective. Even you've got the trial balance that you use for all this, all the shop owners, so it's exactly the same. You can get the exact same details and comparative numbers to look at the whole array of data. So there's confidence there that what you've got is a proven process and a way that you do things, a way that you set it up, a way that you get it oriented, so that you're spitting out that same good data really, really fast and efficiently all the time, and makes those conversations way easier because you know what you're looking at.
What have we learned, in our travels?
Yeah.
Consistency is a few things. One of which is simplicity.
Yeah.
And consistency, right?
Yeah.
And I think our P&L, the way we've got it laid out, is super. It's super simple to follow.
Yeah.
And it's consistent, and that's just where you start seeing those trends month after month, year after year.
Yeah.
You don't see those trends at all if you're P&L. I mean, I've said it, I don't know how many times now in this series, but the revenues and the laundry list, you can't really see trends. At a high level, I suppose you can, but we need to be zeroing into much more in depth if we want to start getting better in the margins and better in the business, better in the profitability, improving efficiency.
Yeah, no, that makes sense. I would wager that a lot of shop owners are looking at revenue daily, probably, weekly, because it's an easy one to see.
Exactly.
But what we're getting at here is the underlying costs that make that up, are really going to highlight some big differences.
Mm-hmm. Yeah. If all you're doing is chasing the top line, you could be putting a pile of work in, and you're really not making any more money than you were.
Yeah.
By not chasing, you're expending a ton of effort to chase the top line, and you haven't really done anything on the bottom line.
Yeah.
In fact, you might have gone up. Exactly. You might have even spent money and cost yourself money and time, and so if we're going to be analyzing businesses properly, providing proper guidance, we've got to be looking at this stuff all the time.
Yeah.
Your data's got to be up to date all the time, and we've got to be actually committed to wanting to do that.
Cool. All right, that's great. So that's our topic today is getting in depth on margins. Brian, you've highlighted how important it is that shop owners know, first of all, get the data right, know what they should be, and that's where we can help put that package together for them so that they can see it, start to get some real clarity on what's going on in their business. Yeah. Let's move into a real example of that, which is our pro tip today. So we said, what's one thing we can do that will help my shop profit 3 times what I pay you to do my accounting. Right. And this is really a return on investment type of conversation. Yeah. We know that nobody likes to pay fees for things that don't give them something back. Correct. In this case, we're saying, look, we think we can give you a return on paying accounting fees for the regular stuff that's going to happen anyway, just from that value that comes in behind the scenes. So I'm going to get you to walk us through what that looks like. I'm excited. 3 times return is a nice one for me. Tell me a little bit about it.
Yeah. So we've got it is a real life example, of course, and the confidentiality reasons, we're not going to give the actual shop.
Sure. Okay.
So we've got Wayne Gretzky Auto here.
I love it. Yeah.
You know what Wayne onboarded with us in January of 19, and before he was onboarding with us, he was experiencing some issues. You know, his financials again didn't break out the revenues. It was just revenues and the laundry list of expenses. The POS system he was running indicated a labor margin of 75%.
Okay, which is awesome.
Well, yeah, but that was one of the things that was, firstly stuck out to us. I mean, that's pretty high.
Yeah.
It's pretty good. And he was trending about $75,000 a month in labor sales.
Okay.
And stuff. So just some of the background.
Yeah.
And just for context as well, at the time, we were doing the monthlies at $500 a month. That's for the monthly work we were doing.
Yeah.
Again, this wasn't including the compliance end of things. That 500 doesn't include the tax return filing and things and that compliance, but it was the monthly. So that works out to $6,000 a year. Okay.
So spending $6,000 a year
Yeah.
on figuring this stuff out.
Yeah. So we worked with him to rework the financials, get it into our standard, if you will, the EJDM Money Wrench standard. The POS, and as well looked in the POS system, and these things take time. You just don't magically go click a few buttons and all of a sudden things go. You got to dig into this stuff and work at it, and it's kind of almost like if probably people watching haven't audited before, but you and I have both audited.
Yeah.
And you've got to, when you're auditing, you're devising procedures. You know something might not be right. You're trying to figure out why, and thinking outside the box. So when we look at POS systems, we do have to do that. Which is, okay, what's the issue here? Try some different things, maybe some spot tests of things and whatnot. So we worked with them, and what ended up happening was we found out, like, when we rejigged everything, the labor margins were actually only at 50%.
Yeah, awesome.
So he's sitting there thinking the POS system is 75, and why am I not doing as well as I should be doing? And underlying, it's really trending at 50%. So that was a bit of
amazing.
Enlightening, certainly for them, and like we do see that the POS system is 75. What the heck's going on, right? Well, there's some issues in behind the scenes, and again, the accountant that it was using wasn't given the financials broken out in a manner that would have highlighted that, right? When you just see revenues and those expenses, you can't tell.
That makes sense.
Yeah, you can't tell. Okay, so the 50% labor margin. Not terrible.
That's fair.
But not where we'd like it to see. We like to see guys trending at higher than that. So we discuss and we say, hey, where do you want to try to get to, at least for 19?
Yeah.
And, we were trying to get at a more aggressive goal, but, Wayne settled on just a 52%, which is just a mere 2%. Better.
So first he had some sticker shock because he thought he was at 75. He said, no, you're actually at 50.
Yeah.
So he set a goal for 52.
52, just in the, eventually to get it further along. He's further along than that now, but the initial goal at 52. And what did we do in there? Well, really at the labor end, we were focusing on the labor and efficiencies, right? Yeah. That's a big area. How do I boost my margin in labor? Well, I could just jump my shop rate. That's a way, but if you're coming in and you're seeing, $100 an hour shop rate, and then all of a sudden it's 150.
Yeah.
It's probably a conversation that you're going to be having with me. Yeah. Going, what the heck's going on here, Brian?
And I can't do that forever.
Yeah, exactly. I can't get it up to $1,000 an hour, right? I mean, we'd all love that to be the case, but so we focused in on the labor and tech efficiencies, which is a lot of places where if you're not really paying attention, you're gonna find some efficiencies there for sure. And so he did see that, guys weren't as busy as they should be. And actually some hard conversations had to be had.
Yeah.
And was able to, without raising sales, drop some payroll costs, which equated to, in this case, about $1,500 a month.
Yeah.
Which when you take that out across the board, that's $18,000 a year.
Yeah.
3 times
the fee.
Yeah, right? So you know, there was some costs that had to be, or some conversations that had to be had. And in this case, a guy was actually willing to go down to part-time.
Yeah.
But, you know, without boosting sales, he boosts his profit and ends up increasing that margin to that targeted point and paying for our fees effectively.
Yeah, absolutely. Well, yeah, plus extra. So puts 12 grand in his pocket extra. Plus, you know, I think maybe there's some benefit there of actually knowing the numbers and being able to hold people accountable for it.
Yeah.
Right.
You know, and part of what he was able to do is engage his team too, right? When they started actually looking at efficiencies, engaging the team into weekly, you know, Monday morning meetings, going, how are we going to get our efficiency at this particular percentage that we want for the week?
Yeah.
And it just starts building camaraderie within the team, and they're actually all working towards a goal. It's just, I mean, it's not just a number. There's a culture to it as well. The shop starts operating better. The guys are working harder, and you know, he's rewarding them with a, you know, at the Friday, for instance, one, you know, week in the summer, they shut the shop down and they go cook hot dogs in the back. You know, and he's behind the grill working, right? But those are just the team building exercises that come out of that as well too, right?
Yeah, good culture.
The techs and the shop or the service writer, they're all working together. And you know, that was only a 2%.
Yeah, right. And you might find somebody that's hitting 35 right now and can make some great leads out of it.
Exactly.
Right? And that's not just year one. I mean, or that is just year one. Think of the return you're going to get now for every other year that follows.
That follows that, and then you start actually doing some other things with looking into the pricing of the labor hours and just the overall efficiencies and whatnot between that. You can start boosting sales as well so, you know, driving down costs or keeping costs efficient and then boosting sales as well.
Cool.
There's other techniques there too. So.
All right, well, that's some awesome stuff. Anything else you want to say about that stuff in particular?
Well, yeah, you know, like again, that's just one example of the many ways that when you start digging into these numbers and start really working at them, where we can start building efficiencies and building profitability, right?
Yeah.
You know, like you said, a guy might be used to paying X in accounting fees, and we might be coming in at more. Yeah. But this is what we're doing with them. We're working monthly. We're working on ways to help you better your business and show that return on.
It's much more of a partner in business.
Absolutely.
And learning and education than it is just filing taxes for a gal or guy that owns a shop.
Right.
Absolutely.
Right.
Yeah. Okay. Awesome. Okay. So that's our pro tip. So today I'm just going to walk us through what we've done. We've looked at our margins, why it's so important, and how we think you can make way more money when you start to know them and understand them. Given you a real life example of that in a way where we helped a client do that and boosted their revenue. And I got to say, for every day that goes by that you're not doing this, you're losing money.
Exactly.
Right? So we want your business to be successful. We love it when you are. It makes us happy when we see clients boost those things and just get that clarity and understanding of, oh, this is what's going on and what should be, and this is how I can run my business better for the next 50 years.
Right.
Maybe not 50 years, but Okay, awesome. Brian, if we want to get a hold of you, how do we do it, and what are you able to give us for free out of that?
Well, so there's our monthly how does your shop compare?
Yeah.
We can provide that to give an idea as to what we kick out to clients on a monthly basis.
Give an example of that.
Yeah, and that lays out the margins and just how we present this back on a monthly basis.
Yeah.
Then there's also there's a lot of great information on the site as well, and
moneywrench.ca.
Moneywrench.ca. Yeah. You know, reach out to us, email, Facebook, LinkedIn, there's a chat bot on the website,
Yeah.
There's all kinds of ways to get us. And we really just want to, at the initial is have a no obligation call. Yeah. That's really what it is. If you're interested to understand more about your shop and your finances, pick up the phone, arrange a call, and we'll get on with you and we'll see what we can do.
Cool.
That's effectively, I think we know we can help shops. We just, they just need to want that help.
Yeah, no, that's a fair point.
Then there's a lot of, if you don't want to improve, then, well, then you're not probably going to improve. So,
Okay, so next week we've got Shannon, one of our CPAs in the office. She's going to be here joining us. We're going to be talking about bookkeeping, the cloud, and are you scared of it and why?
Yeah, exactly. There are some people who are, legitimately afraid of the cloud. It's this weird thing that we all know what clouds are, but when it's in the text context, it's, well, what is it?
Yeah.
Is it some weird thing? Is it safe?
Yeah.
Okay, so I'm not going to lose all my data, or somebody else can be able to see it, those types of things. So there's that, as well as the bookkeeping component for sure.
Yeah.
Awesome. Which is, when we're talking about what we're talking about, bookkeeping is where it all starts.
Right.
So if your bookkeeping's offside from the get-go, you're offside from the get-go.
Yeah. Super. Okay, so make sure your bookkeepers are there. If it's your spouse or somebody else you pay to do it, love to have them on that conversation, ask them questions if they want to. We're going to get into that, and like I said, Shannon will be here with us. She'll be fun. She's a great gal and helps us out here a ton. So we're pretty excited about that.
Yeah, you bet.
Awesome. Okay, take care. We'll see you soon. Thanks, Brian.
Yeah, thanks, everyone. Okay, bye-bye.